Hey, what's going on, everybody? So I posted on the Facebook group last night, and I just asked, what are some things that you want me to try to expand on for the stock market? What are some things that you're confused about? What are some things that concern you about the stock market and investing? And one of the things that got brought up was taxes. So I'm not here to tell you how exactly your taxes work. I'm not here, to expand on it too much, but I do know a little bit, enough to explain. I advise you to talk to whoever does your taxes. That's going to be your best bet, just to be safe, just to be sure. But I can give you the basics of how your taxes are going to work with investing. So anytime you buy a stock and sell a stock or an ETF, which is what I mostly do is ETFs, any profit that you make at all is considered capital gains. Now there are short-term capital gains and there are long-term capital gains. Short-term capital gains are considered like a day trade or a swing trade or any trade that you make within a year. So if I bought a stock today and I sold it for a profit anytime within a year's period, those are considered short-term capital gains. And I will owe on the profit. So say that I invested $100 and I made $25 profit within this year, and I sold it and I took my profits. I would owe whatever my personal tax rate is on that money. If I'm at a 24% tax rate, I will owe 24% taxes on whatever my profit was. Now, long-term capital gains are any holding that you have and you hold it for an entire year and a day, and then you sell it. You get a tax break on that. So what happens then is you would most likely owe 15% of whatever you gained. So the benefits of investing long-term tax-wise is more beneficial for us than quick trading or trading within the same year. What I focus on mainly is long-term investing, which, as you can see, is helpful when it comes to taxes because I won't owe as many taxes on my money as if I were to trade it within the same year. I hope that kind of explains things a little bit. I hope that's not too complicated. Like I said, talk to someone who does taxes for a living. I do not, but that is a very condensed version of how the taxes on investing and what you get out of the stock market, about how they work. Now, something very important for you to know is you do not owe any taxes at all until you sell your shares. When you actually make your money, when you actually get your money out of the stock market, that is when you owe taxes. If I invest in an ETF from now until 20 years from now, I don't owe any taxes at all, zero taxes, until 20 years from now I take my money out, and now I owe my 15%, or whatever your correlating tax rate is, whatever your tax break will be. That is when you owe your taxes. And that's why I like to invest long term. I do not have to pay taxes on something that I'm investing in long term until I actually take my money out. Now I do a little bit of day trading, a little bit of swing trading, and I will owe my tax rate on those gains that I gain from those short-term capital gains. But that's a little bit of the differences. Be sure to comment below if this helps you, if this answers any of your questions, if there's other questions about taxes. Like I said, find whoever does your taxes and ask them. Find a professional. I am not that, but I do know a little bit about it, enough to explain this video to you. So leave me a comment down below, like the video, share it, and I'll have some more videos coming soon. Thanks, guys.